Hello everyone, welcome to my channel. Guys, Terra's Luna price remains at risk of crashing hard. Terra price almost rallied to the 78.6% Fibonacci level of the June decline, at 112, in early Asia Pac trading. Since then, don't forget to like the video, subscribe to my channel and turn on the notification bell before going into the details. I used special indicators in the chart for you. You will get 90% accurate results. Watch the video till the end without skipping. Profit taking has seen a fade and risks a collapse to the 23.6% Fibonacci, at 0.95, and 10% drop. The nervousness in Luna price, with violent moves in swings within hours, shows it should not be traded by the weak-hearted. Terra price is fading a tad in European trading as the Asia-Pacific session saw a rally initially continuing from Thursday evening towards 112, and the 78.6% Fibonacci level of the mid-June decline. The move started during U.S. trading hours on Thursday as equities rallied strongly, and the risk-on theme dominated in several asset classes. Now sentiment has changed, Luna price has pulled back and there is a risk of a full collapse back to 0.97 for a loss of over 10%. Luna price at risk of paring back incurred gains from Thursday. Terra price has been printing solid gains since the start of July, with a gain of over 17% booked in total. Thus far, the good news for Luna price action is that it was in dire need of some relief after the battering it took in the first half year of 2022. Technically, it all made sense with excellent support at 0.95 or the 23.6% Fibonacci level, holding quite well, and then a steamroller rally up towards 112, or the 78.6% Fibonacci level, and all on the back of dollar strength. Luna price, however, sees a fade unfolding this morning in the European session, which could spell trouble. Bulls will not bother buying below 107, for example, at the 61.8% Fibonacci level, and will instead want to wait for a lower level to re-enter the rally. This makes the steep rally unsustainable and could trigger a full paring back towards 1000 near the 38.2% Fibonacci level, or support along the green ascending trendline near 0.98. As already mentioned above, a few Fibonacci levels are set up to be quite interesting. Certainly, the 107 level at 61.8% is key, bolstered by the fact it is where the market performed an evening gap between the close of one candle and the open of the next candle. A brief dip below the 61.8% Fibonacci level could fill that gap and be used as an entry point for bulls to rally up to the next target at 115, which is a very technical level going forward. Fed Vice Chair calls for more crypto regulation, notes Terra collapse. Crypto does not yet pose a systemic risk, but now is the time to ensure that it doesn't happen, says the Fed's Lael Brainerd. The Federal Reserve Vice Chair today called on greater crypto regulation, noting that many investors have recently suffered significant losses. In a Friday speech at the Bank of England conference in London, U.S. Central Bank Governor Lael Brainerd noted that the crypto market is not yet big enough to pose a systemic risk to the traditional financial system. But she added that now was the time to ensure the regulatory perimeter encompasses crypto finance. We are closely monitoring recent events where risks in the system have crystallized and many crypto investors have suffered losses, said Brainerd. Despite significant investor losses, the crypto financial system does not yet appear to be so large or so interconnected with the traditional financial system as to pose a systemic risk. This is the right time to establish which crypto activities are permissible for regulated entities and under what constraints so that spillovers to the core financial system remain well contained, she added. Brainerd referred to Bitcoin's plunge. The biggest cryptocurrency by market cap is down 68.5% from its November 2021 all-time high of $69,044.77, and mentioned the collapse of blockchain network Terra. US and South Korea to share data on crypto cases, including Luna and UST meltdown. Report: the US and South Korean governments have reportedly agreed to share data on ongoing crypto cases, including the case surrounding Terraform Labs CEO Do Kwon and the collapse of cryptocurrency Terra and stablecoin Terra USD. US and South Korea to share data on crypto investigations. South Korea's Justice Minister Han Dong-hoon met with US prosecution officials during a visit to New York this week, Yonhap news agency reported Wednesday. The US officials present at the meeting included Andrea Griswold, chief counsel to the United States Attorney, and Scott Hartman, co-chief of the Securities and Commodities Fraud Task Force of the U.S. Attorney's Office for the Southern District of New York. The officials from the two countries examined ways to enhance cooperation in the investigation of major securities fraud and financial crimes, including those involving cryptocurrency. Specifically, they discussed information exchange between the Seoul Southern District Prosecutor's Office and the Southern District of New York office. The two sides agreed to share their latest investigation data on ongoing crypto cases, including the case surrounding the collapse of cryptocurrency Terra and algorithmic stablecoin Terra USD, the publication conveyed. Both the US and South Korea are investigating Terraform Labs founder Do Kwon and the implosion of Luna and Dust. South Korean prosecutors are looking into possible fraud charges. In addition, the Korean government is considering imposing a unified listing standard on cryptocurrency exchanges. In the US, the Securities and Exchange Commission, SEC, is investigating Do Kwon and whether the marketing of USD before it crashed violated investor protection regulations. The Luna implosion prompted SEC Chairman Gary Gensler to warn that a lot of crypto tokens will fail. Meanwhile, US lawmakers are also calling for the urgent regulation of stablecoins. Can Terra's Luna price recover after an 88% crash? Luna price shows an opportunity and two ways how traders can profit from it. Investors can expect the altcoin to reverse and trigger its recovery rally to $3.50 or higher. A daily candlestick close below $1.69 will invalidate the bullish thesis for Terra. Luna price has been consolidating in a tight range since June 30th and shows no signs of directional bias. However, investors should be prepared for a quick and volatile move to emerge as soon as Bitcoin develops a bullish bias to retest the 200-week simple moving average, SMA. Luna 2.0 price in its state Luna price, or the newly launched version of Luna, was extremely volatile after it launched. The altcoin rallied from 50 cents to $30 in a matter of hours but retraced 88% equally quickly to $3.50. Even after this catastrophic fall, the altcoin remained highly volatile and largely uncorrelated to the large crypto market. This characteristic is what made Luna 2.0 interesting. The altcoin created a range, extending from $3.50 to $10 and swept the highs. However, the bullish momentum had by then been exhausted, and the gains ceased, and price started pushing lower. After slipping below the range low at $3.50, Luna 2.0 set equal highs around this level in an attempt to recover but failed. Since then, Terra has been consolidating and is currently trading at $2.13. Mean reversion and an opportunity to hit it big. The mean reversion concept, in a general sense, indicates that extremes normalize, i.e., things at extremes tend to return to the mean. The best example is electrons in an atom. When they are blasted with neutrons, they get excited and move to a higher state, but since that state is unstable, they expel energy in the form of photons and then return to their original state, where they are stable. This phenomenon is used in lasers and is true for most cases in nature. With respect to trading, when an asset's price explodes violently in one direction, it is unsustainable and returns to the mean. This is the reason why stock markets have cycles or bull and bear runs. Thanks for watching. Don't forget to like the video and subscribe to my channel. See you in the next video.